Hello everyone, PS from PS Invest Plays here today. GM stock has had a stellar performance over the past year and in 2021, where its stock has risen from $14 to $64, a 350% increase. In spite of its strong execution and sustained profitability, on a medium-term basis, its stock price has shed 25% since June due to chip shortages and Chevy Bolt recalls. Is this trend going to continue, or we can expect higher stock prices in 2021 and beyond? In this video, we will understand its business, its financials, its future outlook, and review its charts using Elliot wave to see how we can make money. So stick around. I think you'll like what I have in store for you today. General Motors, ticker GM. GM is an American automotive multinational corporation headquartered in Detroit, Michigan, United States. It is the largest American and one of the world's largest automobile manufacturers. As of 2021, General Motors is ranked number 22 on the Fortune 500 rankings of the largest United States corporations by total revenue. GM manufactures vehicles in several countries through its four core automobile brands: Chevrolet, Buick, GMC, and Cadillac. It also either owns or holds a significant stake in foreign brands such as Wuling, Baojun, and Jifang. GM is one of the best executing traditional OEMs across the whole spectrum of disrupting technologies in the sector, which should create a significant competitive advantage from a brand perspective for GM. Also, GM is very strong operationally with lean and profitable legacy business aided by its captive finance arm, which combined allows the company to spend more on transforming the business than many of its peers could afford. Even though battery electric vehicles are getting the most attention in the media, the legacy internal combustion engine ICE will most likely be replaced by a mix of battery, hybrid, and fuel cells powered vehicles, depending on the size and distance traveled. In that regard, GM brand is very well positioned to benefit from improved customer perceptions over the coming years as more EV models equipped with Super Cruise are released. There are a number of reasons why GM is more likely to be successful in transforming its brands in similar fashion that Hyundai did. For the successful launch of its 30 new EV models by 2025, GM has all the necessary pieces put together. Partnering with the current leader in lithium-ion batteries, LG Chem, and their joint venture is already planning a second battery cell factory in the US. GM Cruise is a leader in autonomous driving and has attracted key partners such as Microsoft, SoftBank, Honda, and Walmart. The fact that these companies are teaming up with GM Cruise speaks for itself and supports the claims that Cruise is still leading in this space. GM Cruise will run driverless taxis in Dubai in 2023. While there's a significant opportunity behind driverless taxi services globally, this will have a profound impact on brand perception of all vehicles equipped with Super Cruise. GM is also scaling up its battery charging network, developing its fuel cells technology, and improving value-added services such as OnStar. These products and services are on one hand a prerequisite for the successful transformation of GM brands, and on the other allows the company to expand into other areas such as commercial transportation and logistics. In addition to GM's excellent execution in areas that affect brand perception, the company is also very strong financially. This often goes unnoticed as more people are focusing on expectations and hopes about the future and do not care about high-quality business models. GM is still a much leaner and profitable legacy ICE manufacturer than its major peer, Ford. Through the successful restructuring of the business and focus on highly profitable models, the gap between GM and Ford's automotive gross margins is still quite high. As a result, GM has a significant competitive advantage in the form of its leaner and more profitable automotive business, which allows the company to pursue strategic investments in the field of autonomous driving, batteries, fuel cells, and connectivity. In addition to the lean automotive business, GM has also done a great job at strengthening its captive finance arm, which is crucial for the well-being of the company. Even though GM Financial makes only 10% of the company's total revenues, being able to offer financing and leasing services is another important competitive advantage. GM Financial is a highly profitable business, which also acts as an important counter-cyclical ballast for GM's profitability, thus allowing GM to continue spending even during market downturns or industry-wide headwinds. GM is currently trading at a price-to-earnings multiple of approximately 6x 2021 EPS. This price-to-earnings is comparable to its traditional price-to-earnings, indicating that little or no value is being placed on GM's Cruise subsidiary. Cruise is developing autonomous ride services, also called autonomous ride-hailing, robotaxis, or Uber without a driver. Many who understand autonomous driving believe that this will become an extremely large market. GM owns an estimated 70% of Cruise. Cruise has an exceptional potential in the exciting new market for autonomous ride services, yet it does not appear to be considered in GM's current valuation. When Cruise is spun off in the next couple of years, it could more than double GM's valuation. This provides a unique opportunity to make a relatively safe investment with significant hidden upside potential. Investing in GM is also a way to invest in a new high-potential technology business at a price that is the same or lower than private equity investors. The financials for GM are excellent. Revenue, gross profit, EBITDA, net income, earnings per share are all moving in the right direction and are looking extremely good. GM dividend for its common shares now stands at 38 cents per share quarterly, or $1.52 per year. At its current price, that amounts to a cash return of 3.16%, which is higher than the average dividend yield of S&P 500, which is 1.3%. Also, GM has been paying dividends since 2010 and is also increasing them yearly. While GM is positioning itself as a leader in EVs, autonomous driving, fuel cells, and fleet management, its legacy businesses are strong and highly profitable. The recent headwinds are overblown. The semiconductor chip shortage is temporary, and financial impact to GM on Chevy Bolt's recalls is being paid 80% by LG Chem, as it is related to battery failure supplied by LG Chem. GM stock points to an investment that should provide good returns over the long haul. This is also indicative in the charts, where I see the stock price to increase considerably in the next 3 to 5 years. Now let's look at the charts for GM. If you like this video, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. The bull run that started for GM way back in 2020 is still not over. It has completed its first 3 waves, and currently it is in a pullback wave, which is wave 4. In this wave, I expect strong resistance around $48, and support around $43. This is an excellent buy zone for GM. After this correction is completed, I expect wave 5 to resume, taking the stock price to $96.54. Which means if you buy around this resistance and support zone, you can expect a 120% profit in the next 3 to 5 years. Now let's summarize. At its current stock price, you should expect a slight pullback. I would encourage long-term investors to nibble at current stock prices. They offer good entry point, and when the stock price is around $43, that would be an excellent entry point for long haul. In the long term, I expect the stock price to reach $96.54, giving you a profit of 120%. And the icing on the cake is the 3.16% dividend yield that you get on top of the stock price appreciation. What do you think of this analysis? Please leave me a comment and let me know. As always, don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. Until then, bye-bye.